So we'll take up ADX this session, and ADX is another very good indicator, which is a momentum indicator and more so a strength indicator. And ADX was developed by J. Wells Wilder, who is the same person who developed the indicator RSI, which I use the most. And it is a momentum bar strength oscillator. ADX is used to quantify trend strength. So you know if a market or a stock is in strength, how strong the strength or the trend is what is indicated by the ADX. ADX calculations are based on moving average of price range expansions over a given period of time. Now, theoretically, very difficult to understand often, but I'll tell you the practically how to use it. So ADX has three lines, what you see over here in the background. So the black one is the ADX. Then you have the other two, which is typically marked with blue and red, are the DMs or directional indicators. So the positive and negative directional movement form the backbone of the directional moving system. Wells Wilder determined directional movement by comparing the difference between two consecutive lows with the difference between their respective highs. Now, theoretically, we can understand what he's trying to say and the formula he's used behind that. The plus directional indicator and the minus directional indicator are derived from smoothed averages of difference and measure trend direction over time. These two indicators are often collectively referred to as DMI, directional movement indicator. Now, no point breaking the head over the definitions of all these things, but what we need to understand is how they work. Now, how to use the ADX is you have DM plus, which is indicated by the blue line. You have DM minus, which is indicated by the red line, and ADX, which is the black line. Now, whenever the DM plus is over DM minus, means that the price is moving up. And whenever the DM minus is over the DM plus, is when the stock price is going down. In the background, clearly you can see when the red line was going up, that means the price is coming down. And when from here on, the blue line took over and it crossed up, it meant the price was going up. The black line is the indicator which shows the strength of that trend, whether it is up or down. So three criteria, please remember, very important. When the ADX, that is the black line, is below 20. Now, please understand, like RSI, ADX is also a banded oscillator from 0 to 100. Okay. So when ADX is below 20, it is choppy, sideways movement or extreme volatility. When ADX is between 20 and 50, that means the trend is trending. The stock price is trending, whether now that is a bearish trend or a bullish trend, irrespective. When the ADX is above 50, that means it is into an exhaustion and the rally may come ending any given time and it is time to be cautious. Now, when I say ADX above 50 is exhaustion, please know it happens more so in sectorial indices and in stocks. It doesn't happen so frequently in Nifty and Bank Nifty, which are the bigger indices. Okay, so Nifty and Bank Nifty very rarely cross 50, but the sectorial indices and stocks do often. Now, what ADX with DM signify? So DM plus and ADX up is strong bullish. This is very important. Please keep that in mind. DM minus up and ADX up is a very bearish sign. Don't go against a trend. If the ADX, DM plus and ADX up are up together, that means the price is trending and it is best to avoid a very deep short in that. Okay, so typically that's how you look at the strength and you decide whether to be up positive or negative. In short swing in between, maybe a different story. So don't go against the trend. Now, ADX is also a calculation of 14 days, and it is because the lunar cycle is of 14 days and it has been correlated with that. Now, how to read the ADX is, I'm going to show you. This is a chart of Nifty over a period of time. Now, please look at the blue, red, and the black line over here. Whenever the blue line has been trending and the ADX is going up along with that, it shows that the price is moving up. And higher the ADX goes or the steeper the ADX goes, it just shows that that the trend is much stronger over there. Now, this is the 2020 fall. So you see the red line going up, that is a DM minus, which means the price is coming down. The DM minus is above the DM plus. So it was rising, and along with that, the ADX was rising, which only means that there was a very strong downside trend in Nifty at that point in time. And likewise, after that, it was consolidating. So whenever you see DMs and ADX having a lot of zigzag movements, that is a time where it is consolidating or it is sideways or it is very confusing. It clearly means that there's no defined trend in it. And the trend has obviously no strength or weakness in irrespective. And then when you see the blue line smoothly taking over and trending up, and along with that, the ADX trending up, that is when you know that, okay, there's a directional change and now the trend is picking steam. Now, I personally do not use ADX to use as a buy and sell signal, but if one wants to use it, the best way is this, that whenever a DM plus takes over the DM minus and the ADX from bottom crosses 2023, that's a point in time where you can start building your longs. And likewise, whenever the DM minus takes over the DM plus and the ADX rises from the bottom, crosses 20 and start rising up, you can go short in that particular stock. So this is how you identify a buying point using the ADX. But something that I do not use, I clearly only use it to see the strength of the trend. Now, after 21, the market, end of 21, market was in a very strong movement upside. Clearly, DM plus moving up and ADX moving up. There is no weakness in the strength. One thing that ADX helps is avoid a lot of noise with some tiny negative candles formed in between. There are some negative candles which confuse you that the market is going to fall. You just move from other indicators to ADX, just see whether the ADX is trending or no. If ADX is trending, it is not showing any change in direction to flat or negative, you can just continue holding your trend at that point in time without worrying. And over here is when the first time it started going sideways. This is where you start getting cautious. And the moment it takes a dip down, that's when you start exiting the market, you book your profits and sit. After that, what has happened? Even if the DM plus was on top, there was a weakness in the trend. When the slope of ADX is down, it is only means that it is losing the strength of the trend. When it is losing the strength of the trend, it only means that the price is going to come down. It can go negative, it can go sideways. Clearly, in this case, it started going sideways. So I've just zoomed this further for your understanding better. Over here, when DM plus took over DM minus, there's a trend which started over here. You see this entire rally. You have your ADX which started picking up and your ADX started rising, clearly showing that there was a very strong trend continuing. These one or two candles in between should not have been of any concern, even though they point out as reversal. There was actually no reversal. Now just think of it this way: at you seeing this candle over here and a follow-up candle over here, you start exiting the profit. You book profit and exit in the market, thinking, okay, now these are negative exhaustion candles, and the market should start falling from here. Your RSI will start cooling off. So it gets very confusing. The reality was that it was still trending and there was no concern. There's a further 1,000 points rally from there. When do you exit the market is when ADX starts giving you a negative indication by moving down. The moment it turns its face down is when you need to get cautious and start exiting the positions. Thereafter, there may be certain momentum left in the market, but please understand there is a lack of strength in it. Okay, and it can just give up any given time and start falling. Now, clearly over here, ADX started cooling off. This rally was there. We all know how the market suddenly fell overnight. This one fall was enough to bring everyone's positions hit badly, triggering stop losses. And this can be avoided. You would have got out somewhere over here using the ADX. You wouldn't have been a part of this. Thereafter, it went sideways. Now, strong bearish, I just explained earlier. I'm going to show it over here again. If you see, ADX was clearly pointing at a choppy sideways market. DM minus took over DM plus and it started moving up. And look at the way ADX was rising, showing extreme trend of bearishness. And this went on. Now, none of us knew where the market is going to halt over here. When is the fall going to halt over here? Because there's so much of confusion. When ADX turned down, that was the first sign that the fall is going to get exhausted or stop over here. And you need to watch out for bullish candles. This is where the fall really stopped and started moving up, gradually consolidating, and a rally started. Thereafter, there was a little sideways movement. It went on, but eventually it did pick up steam a couple of months later. Now, this is Nifty in the last 2 months. If you see in the last 2 months, how confusing the market was. October was very difficult trade for us to trade. Until mid-November, market was not trending. Stocks were not trending. After this rally over here, when it started falling, ADX had given you a clear indication. Not DM plus or minus were able to cross and sustain over each other, and nor ADX was pointing to any strength building up in that trend, even if it was crossing. So this was a clear sideways choppy move. So clearly ADX was pointing out that not everything is good, while it was not even giving you a bearish sign. So it was just a consolidation phase, which was very clearly being pointed out by the ADX. Now, when ADX goes above 50, is something that is first thing you need to do is get cautious. It is a time of exhaustion. Now, it is once Nifty often comes close to 50 and falls. Very rarely it crosses 50. So here it came to 50. Everything was good, and see how in one day it crossed negative and started falling from here. While everything was good over here, there was no concern in July, August, September, and Nifty went sideways. So whenever ADX is above 50, you don't even really need to watch out for any reversal candles or change in trend. Best thing is to do is get out of that stock or get out of the market and sit calm. It'll eventually give you an indication of fall or a sideways move. Now, ADX can also cut noise in the trending market. Now, why have I given this particular Bank Nifty chart? And I'll tell you. When Bank Nifty was trending, if you see these kind of candles over here are very confusing, or over here they are very confusing, and you do not know whether Bank Nifty is going to fall from here or no, or Bank Nifty trend reversal is going to happen. While everything seems overbought at that point in time, but the rally can continue in that. So you need to come back to ADX. ADX was moving up. DM was moving up. So you know that the strength in the trend has not exhausted. You would have exited over here when it turned down over here. So you would not have missed this particular rally stretch also at that point in time. You could have been cautious, but getting or changing your view about Bank Nifty at that point in time was not necessary. Your change of view should start when the ADX turned down, and see the fall that followed after it has turned down. And it also went into a short-term bearish trend over here. And mind you, ADX can be used on every time frame. If you're using it on weekly, and weekly is indicating that there's a change of trend that is happening, you know that the fall or the consolidation can be bigger or longer. Likewise on monthly. So ADX on sector. Now, why IT sector? Again, I'll tell you, there is a very strong trend in IT sector prior to 2021. It is one of the times where you see ADX crossing 50. 50 to 60 is an extreme euphoria kind of a phase. And that is what was happening over here. While US had already said that inflation was high and things are not good, there was an extreme move in this particular sector over here, which would eventually get the most affected. It pointed down. This was a time when you had to start exiting. Exit over here. It went sideways for a couple of weeks together. There was a pullback over here, but pullback did not have any strength. Please observe this. When this rally happened, DM plus was not strong, nor was the ADX supporting it. Clearly, this was a trap. Thereafter, it went sideways. And over here, when DM minus was going up and ADX was going up along with that, you see such a drastic fall over here. And from that time till now, if you see, there is no clear trend in IT sector. It has just been a very choppy sideways move with not DM or DM plus or minus giving any indications up or down, or the ADX supporting it. This is a time where option writers sell out of the money, calls and puts, and make good money. Now, this is currently where we stand. Now, just by seeing the ADX, now you know why are we being cautious on the market. Are we clear about the trend of the market, what we just discussed prior to the ADX session? There can be a sudden pull up over here, but ADX has pointed towards exhaustion right now. So any upside from here, we know can be a quick upside. but we also know the reaction can follow. This is one of the reasons why we also have nifty shorts in the last few days. So this is how we use ADX. We don't use ADX on a daily basis. We only use ADX during peaks and bottoms. We know that where it is going to head. This is PSE index. PSE index has been sideways, a very strong trend, a very extremely strong trend where it has moved 20% on the index funds. Stocks have moved 50, 100%, and PSE has given a turn down. So you know what is coming your way. It can take support, it can have another rally from here, but the index as such has shown that this is kind of the peak, and from here a sideways to a fall can happen any given time. One of the reasons why I have been saying for the last 2-3 weeks that be watchful on the PSE front. Do's and don'ts. ADX helps cut noise. Don't short or change view just when you see reversal candle. Check the ADX at that point in time. If it is trending, then price can retrace and move back up, and you need not get out of it or short. Only when ADX changes direction, what you start acting on is on your positions at that point in time. ADX can be clubbed with RSI and Bollinger Bands, and you can build up a strategy along with that as per your comfort. Now, as I said, I do not use ADX to identify buy and sell points, but I use it just to check the strength of the trend at that point in time. So guys, this is what I have to share about ADX.